All right, looks like that's what we have. I want to go ahead and get started with our presentation. All right. So today's session, we're going to be talking about AI applications as it relates to accounting and finance, and then why you still need a human. So this is the outline for our presentation today. We're going to talk about why AI accounting is changing the game. The top AI accounting tools give you some basic information on which ones you should use depending on what status your business is at. We're going to talk about what AI gets wrong. There are 5 limits that no software can overcome, and it's really those things that relate to being a human and how we analyze information. How a human advisor turns AI output into actual decisions that you can use to solidify and grow your business. And then what are your next steps, and how do you actually put your AI and your advisor to work for you? So when we look at AI tools, there are basically four categories of tools that we're now using for as a bookkeeper. And these different software platforms are really making it a lot easier to get your bookkeeping done a lot faster. I remember the first time I used AI applications to go through and work on the bank statement reconciliation. We were able to load the bank statement, and it literally took all of the information in like minutes. It used to take me hours to do that. I had like 8 different bank accounts to use, and the AI definitely helped me to move so much faster with getting that information done. I was like, oh my gosh, what used to take me 4 days took me half a day to do. So it was a wonderful, wonderful experience. So AI is a great tool to save you time. And also, if you're saving time, you're saving money because you don't have to pay the bookkeeper for all those hours, correct? And you can use that time to do more analysis and things of that nature. So the four key platforms that we have in terms of AI are what we call full stack platforms. So when you think about a QuickBooks Online that does all of the bookkeeping, all of your reporting, those are your full stack platforms. There's four major ones that people are using now, and that's QuickBooks Online, Xero, Zoho, and FreshBooks. The thing with the full stack platform again is it's a complete accounting suite, and it has AI built in, and they do things such as categorizing, reporting. It can also automate your payroll and also do tax prep. For the categorization and the reporting, what it does is it looks at your historical work that you've done for bookkeeping, and it'll take your bank statement and whatnot, and it'll say, okay, this is a repetitive transaction, so I know how to categorize this. Or you could go ahead and give it instructions and says, whenever you see this account, this is what you're going to allocate it to. Payroll, just like any other payroll system, people could log in their hours, or you could upload your payroll documents and it'll automatically go ahead and sort that information out for you. The thing here is that I love using AI. I'm an accountant, but I love technology. Sometimes when you put your prompts in for your AI, they don't always work out the way you plan them to. So even though you can put the things into AI, you need someone that actually understands what it is pushing out so that you can make sure that it was done properly. We have the APAR, which is accounts payable and accounts receivable specialist. All these platforms do is really focus on accounts payable and accounts receivable. So it deals mostly with invoices. It'll automate your invoices, it can automate your payments, and it works on expense management. These are those ones used for companies that have high transaction volume. I had a client where we did a lot of loan transactions. So we had a lot of payments coming in, payments coming out, additional fees, and things of that nature, or where we were handling treasury management. So the good thing about having Bill.com or Ramp was that we could specify that only our accounts payable or accounts receivable person would have full access to that. So if you weren't touching accounts payable or accounts receivable, we have a large amount of those transactions. It helped us to segregate those duties and make sure you can only focus on accounts payable and or receivables. Then it also allowed our vendors to create their own account, so that way we could do automatic payments, kind of like Zelle. So once we process the payment will be sent to them electronically, either same day or within 72 hours, depending on how they set their payments up. So that was a great tool to use to be able to track accounts payable and receivables. It's really good for helping to make sure you don't have duplicate payments and things of that nature. You have AI native bookkeeping. These are AI first platforms. Usually, if you get a upgraded version, you can get a human bookkeeping team attached to your AI platform. And it's really good with startups and e-commerce. And the reason it's really good with e-commerce, you have a lot of repeat transactions and they're all done virtually. So being able to take those virtual transactions and dump them straight into the AI native bookkeeping system is a great help, and it reduces human errors as well as saves time. You have workflow and receipt tools, and all these do is it works within your current accounting system, and you add it as an additional feature. It will capture receipts and pull out additional information. I don't know if you all had, what was that program called? It was a Neat Desk. And the Neat Desk was an additional platform that you could use, scan all your receipts in, and it would kind of automate and organize what those expenses were. So Dext and Docs YT is the same thing. It will take that information and organize it, and it can help you to streamline your client workflows. Here's a good tool to look at when we are looking at these different programs to try to decide which one would be best for you and where your business is right now. So if you look in the first column, it shows you your tools, what is best for the key AI feature, your pricing, and what is the best fit. So we have QuickBooks Online. Again, that's good for small to medium-sized businesses. Also, you should not have any complex transactions, because I've had some clients that have used QuickBooks, but I've had to do workarounds for certain transactions because QuickBooks is somewhat of an off-the-shelf platform, and that means that you can't fully adjust or adapt that system to what your needs are. And then different levels, like you see here, the pricing goes from 20 to 275. Of course, the higher price plan you have, the more flexibility you'll have with your system. But no matter what, there are some things that just won't work with QuickBooks. The good thing here that I love with QuickBooks Online, because I do use this one quite often, is that it has the auto quoting and cash flow forecasting. So what will happen is, like I discussed with doing the bank statement reconciliations, especially when you have companies with multiple accounts, it can take you a long time to complete your bank statement reconciliation. So I love the fact that you can scan in your bank statement and it'll automatically adapt to and match what's actually already in the accounting system. So that's a great thing. And it can show you what has or has not been found in the accounting system, or if there's any anomalies, but it cannot fix those things for you. So when there's an anomaly, the shortfall here is that you have to understand what's going on in your bank statement and your books in order to fix that anomaly. This one is the most complete suite. We have Xero. These are for growing businesses. The good feature with this on Xero that I like here says just ask Xero AI. So some of those questions that you would ask an accountant to explain to you if you see something that you don't understand or there's a transaction there, it can ask Xero about that information, and it'll give you some information about that transaction or whatever that financial statement is, but it's only going to give you very basic information. This one has what it says Clean UX, which is basically your end user experience. So it's very easy to use, very user friendly. And the good thing here is, as you notice, the fees are lower than QuickBooks. That's because you don't have to pay per seat. You have as many users as you want on the Xero platform. So if you have multiple people working on your books and you're in a early stage of your business, don't have a lot of capital coming in, this is probably going to be your best choice. Zoho Books, it says, is budget conscious for small to medium businesses. They do have workflow automation, and it gives you anomaly alerts. So if something happens in the transaction that they can't quite fix, it'll give you an alert to say, hey, something came through the system. I don't know how to process this, or it looks like there's a duplicate transaction here. Please review. Okay. It's free to $275, very similar to QuickBooks, but they do have the best free tier. So if you're starting now and you just want to practice with the site, this is a good source to use to go ahead and get started for free. I think most of us are pretty privy to Bill.com. Again, it's only for accounts payable and accounts receivable automation. The way the system works is your clients or vendors will send you an invoice. You have someone that approves it, and AI will take that invoice and it can help you to automate it, make sure there are no duplicate charges. It will read in the AI invoice, and it can help you to create your transactions. The good thing with Bill.com is that it usually will flow well within these other three platforms. So you could take your information from Bill.com and have it automatically update to QuickBooks Online. And all you have to do is approve that transaction. Oh, and Bill.com also has a really good source available for training. Excuse me. Zeni, it says, is good for startups. They have AI bookkeeping. And the good thing here is you have a dedicated human finance team. But if you notice that the startup cost is a little bit higher, and the reason this cost is higher at $549 to start is because you do have a dedicated bookkeeper that will talk to you about whatever your transactions are, things of that nature, if you have any questions. So this has an AI and a human hybrid function. So I really love this platform simply because it has the human dedicated finance team to give you the explanation that you need where AI stops. Ramp is for expense management. I know we've seen a lot of these commercials about Ramp. It has auto categorization. It does has duplication detection. It is free. And what this does is it also has a spend control feature here. So when you have a lot of employees that have debit cards, credit cards, or whatnot, it helps you to track where the spending is going and let you know when you're getting to a certain point where you need to control that or know that somebody's going over and above what their actual amount of money should be spent per month. Dext is usually used for accounting firms. And the reason you use Dext more so with accounting firms is it's for when you have a huge amount of information coming in and you need something that is specifically dedicated to organizing the information in your workflows. And this is going to work on a per client basis. The good thing about Dext, when you have a lot of sensitive information coming through, this will help you with security features in terms of making sure that information is encrypted and safe for your client. So it goes directly from your client into the Dext system and to you. You don't necessarily need to do much when it comes to transferring over the internet. And if it does, it is definitely encrypted. So that's really good. If you deal with anything with healthcare, talk about personally identifiable information, but can you imagine sending your debit cards and credit cards information and things of that nature over the internet via email? That is definitely a risk factor for your clients. Here are some sample dashboards that you will see from those systems that we pointed out. So like for QuickBooks, when you look at QuickBooks, it's going to show you your profit and loss for whatever your time period is, income, expenses, bank balances, and you may have more than one bank balance. And you could click it and it'll show you the balance in each account. If your bank accounts are linked, you can see your actual bank balance versus your bookkeeping balance. And that's a good thing to let you know if you need to make some adjusting entries or if there's some entries missing. It may also show some timing differences. It also shows here on your outstanding invoices what your cash flow was for the last 6 months. The good thing about having this available here, it says it's Intuitive Intelligence forecast shown in green. So looking at this information and the way the trends have been working, especially if you have at least a full accounting cycle, it'll be a lot easier for them to give you a more accurate cash flow recommendation or estimate. But the thing with the AI is that it's not aware of what is going on in the industry right now. It only makes this information based on what's actually in your books. And if you notice here, the Xero dashboard is very similar to the one that you see in QuickBooks. Almost all the same information. On Zoho Books, you see the same information. So you'll notice that these dashboards are pretty consistent. What you can do is if you want to add a few additional items there, you can. So like if you see here, it says total receivables, total payables, you can actually add that to your QuickBooks as well, I know for a fact. However, seeing this information here, as you know, I see all this information. I'm not familiar with this business. I see that you have an overdue invoice. You have a few more invoices coming through. It shows me your spend of $24,830. But looking at this dashboard, it doesn't tell me if this is consistent, if it's on target with budget. It doesn't tell me why there's this variance, if there is a variance. And that's the information that you need to use your advisor for. So here is Zeni. This is the one that has your AI bookkeeping with the dedicated CFO advisor. And this is really good for startups. And the reason it's really good for startups is having a dedicated CFO minimally costs you $2,000 if you have a fractional CFO. $2,000, $2,500 is the average. That only gives you about 10 to 15 hours a month of time with your CFO advisor. And that includes the time that they're going to use to review your materials. So having this dedicated CFO advisor attached to Your bookkeeping system is great because now you get that at a smaller rate, and they'll prepare something for you every month that kind of analyzes your financial statements, gives you some feedback and some suggestions. And this is a good thing here. You didn't notice this on the other one, but it talks about your burn rate, about how your money's coming through with your cash flow. And it gives you an expectation or estimate for what your July is going to look like for your expenses and things of that nature. So it's good that this is on here, but you can also add this on QuickBooks as well. But when you see burn rate, how many of you know what burn rate means? And what does the burn rate actually show you? Or what is it indicating about your future activities? And that's where your CFO advisor would actually come into play. Looking at RAMP, remember RAMP only deals with your expenses and things of that nature. So it's going to look at your total spend. It says AI savings found. What this AI savings finds is that you see it says 4 duplicate subs flagged. So that means there were 4 duplicate invoices in the system. And the system found it and flagged it, and it was able to save you that money. Because I have seen where when I first started out in accounting, I worked for a manufacturer, and just about everybody had a credit card. So I was doing accounts payable as well as inventory. And I ended up doing an internal audit review of our credit cards. And I had gone through boxes of credit card receipts and found that we had overspent $275,000. But what prompted that is we had an employee that left, so I took over their work, and I realized that, hold on, I saw that invoice already. I paid that invoice. So when the invoice came through again, it prompted me to do some research. And I found that we had the same invoice that had been paid 3 times, and it was being submitted again for a 4th time. And I was like, oh my goodness. So I talked to our controller and let them know what I found. And I'm like, so if this has happened 4 times for one invoice, how many other invoices have we paid more than once? We need to research that information. And before having finished all of the credit card reviews, like I said, I found $275,000 of overpayments just because we had either paid an invoice 2 or 3 times. So being able to catch duplicate invoices is a major, major key thing that you need to make sure that you're not wasting money. Because once you let them know there's an invoice that was overpaid, they're going to take time to pay you back. They're going to want documentation about, hey, to prove that they were paid more than once. And if some companies know that they can do this and is not being caught, should I say, they're likely to continue to do it. But there were some companies through that process of my internal audit that I found had numerous invoices that were paid multiple times because they were paid via credit card, and then they were also paid with a check through the accounts payable system. Here is on Dext an example of how they did the OCR extraction. And so you're going to look here. This is for Office Depot. If you notice here, they have a receipt image. It gives you the number, the address, what was purchased, toner cartridge, and what the total amount was. So if you look at here, printer paper and toner cartridge, they're going to automatically do it as office expenses. If you notice here, it said check auto. So when it looked at it, you already have that as auto office expenses, so you don't have to go through and check that out to see where it needs to be allocated to. So these things are auto. The ones that says awaiting client category is business travel for Uber. That has not been set up to do auto. So you're going to notice here, it's going to say we have to check it. Unknown merchant photo, it was low quality scan. It needs a re-upload, but will be good in some of these systems. There are some that text the quality of the photo to make sure that you can recognize the information on it. And if not, whoever's uploading the photo will be asked to resubmit another image. Let me pause here for a minute to see if there are any questions in the chat thus far. So do we have any questions thus far? Because I know I don't have anyone watching the chat. All right,
nope.
No questions.
Nothing yet.
Good. I know it's probably some basic information here, but I want to make sure that we are going through this to look at the different categories of transactions. I actually had to do this for clients to say, okay, based on what your business is, which one is going to be the best platform for you? And looking at this, these are some of the things that AI does really well while we're working in accounting. It does a transaction categorization. What it looks at is your chart of accounts, all the entries that you have in real time, and it checks it for accuracy. The more that you use it, the more accurate it becomes. And you can also go through and give the AI instructions on when you see this, you categorize it as this, right? Receipt capture and matching. It can do photos, PDFs, or email. So we know like Ramp and Bill.com, the invoices are submitted via email. And we go through and we look at it and say, okay, whether or not this is a valid invoice. Because this is what will happen too with this is why you, even though you have AI using it, you need a human to check it. With the last client I had that used Bill.com, we had a lot of random invoices being sent to our accounts payable department. And they are so good at creating documentation. They went from the president's email and almost made it look like she approved that transaction because they submitted a copy of an email from her to the document. But I looked at it, I was like, I don't remember approving this transaction. I don't remember seeing a contract come through for this. And my accounts payable person almost approved it, but I told her to hold on, wait a minute, this doesn't look quite right because there was a small typo in the email address for the president. And I did not recall seeing the contract or anything come through, and it was a large amount, and she almost submitted that. So that's why it's really important, even though we have these AI platforms working for us and submitting that information, that there is a human that actually checks this stuff and definitely approves anything that requires a payment that goes out. So on the Bill.com and the things I do, the receipt capture and matching, and key thing is matching. So whenever you have an invoice come through, you want to make sure that you match it to a purchase order or some type of approval in the system. If there is no purchase order or approval in the system, we want to make sure that we confirm that that was an approved charge. So that is something that a human has to do. Some of the AI systems out there that do receipt capture and matching for bill payment, they can let you know whether or not they see a matching approval in the system for that. And if there is no approval, you have to go through and get that approval. But what I did find, when you have people that are doing accounts payable that aren't fully accountants, sometimes they're going to go through and they may approve or push something through that doesn't have an actual invoice attached to it. So you want to verify the vendor, the amount, date, make sure everything matches the receipt as well as the payment approval or payment request form. The bank reconciliation, this is one feature that I can tell you I absolutely love because I've had companies that had 12, 13, 18 different accounts, and they all have to be reconciled. So that could take a few days. So doing this with the bank reconciliation, you connect to the bank feed, it'll sync continuously. It can flag any discrepancies. At the month end, you should still go through with the bank reconciliation and check through this information. So I think this is one of the greatest features that they have, at least for me and what I do for a living, when you can use the AI and actually check that. So you can sync it through, like I said, the QuickBooks. You load the bank statement and it can verify that as an additional level of reconciliation and confirmation. So that's the best feature for me thus far. We have invoice processing and accounts payable routing. It says it can read your invoice, extract the payment details, and routes for approval. The key thing about this here, about being able to read the invoices and routing for approval, if you have certain types of transactions, or some organizations don't have a specific type of transaction, but a certain amount. So like anything over 500 can go straight to the accounts payable, 500 to 2,000 to the senior accountant, and anything above 2,000 has to be approved by the VP or the CFO, correct? And that's how it would actually route your documents for approval. And then it also eliminates manual data entry, because what will happen is for those approvals, it'll go to the exact person that needs to approve it, and you'll push the button. Once you review all the documentation, click yes, I review it, and then yes, you approve it, and it will send it right over to the next person. Anomaly detection. It says it uses machine learning to flag unusual transactions, duplicate payments, and also any policy violations that humans may miss. And some of these things in terms of policy violations could be if you have your system set up to make sure that the purchase order is matched to an invoice. If there is not one purchase invoice attached to the invoice that comes in, it'll flag it to say, hey, this doesn't have the proper documentation, because you have certain documents that need to be attached to it. So I absolutely love that, especially when I am reviewing accounts payable to make sure that everything's getting paid and that they have proper approval processes. I love being able to look through and say, okay, I see everything except for the original purchase order. And if I don't have an original purchase order, I cannot approve this for payment. And especially with employee reimbursements, they'll put in for the reimbursements, but they may not have like a actual receipt there. They don't have an actual receipt and approval for that purchase or whatnot. It can't be approved. It also has real-time reporting for your live dashboards. It gives you the cash flow snapshots, and it can tell you exactly how much money has come in and how much money has gone out to date. So that's a really good thing. You don't have to wait until the month end to see that information. So even though you may not be the accountant, you can log into QuickBooks, look at the dashboard, and see where your revenue and your expenses are at that moment. So although AI is powerful, of course, it's not wise. Remember, it can spit out information, but is not at the point to where it can really analyze information. The only information that AI can analyze is your previous operations and your previous results. The reason why it cannot look at anything future, it only can give you minimal analysis on your books, is because it doesn't understand other things that may have happened within the environment. So one, it doesn't know your goals. It knows what happened, but it doesn't know what you're trying to go. Just because your books are clean doesn't mean that you can actually use that information for decision making. So for example, a lot of us have lived through, we had the mortgage crisis. We've had a lot of downturns in different economies or industries. So when we look at our books and we see a sharp downturn, you don't really know what caused that downturn unless you can analyze other things that have happened in the industry or the environment, or maybe even something that happened within the company. And that says it can't read context. It says a $40,000 expense looks the same whether it's a smart investment or a catastrophic mistake. It categorizes, it doesn't judge. So there is I just saw this the other day. Some people were arguing about going to college. And I do understand that going to college comes with student loans because I have a lot of them. I have myself and I have my children. So they're like, hey, you're going to spend 6 figures to go to college to get a degree. They're only going to pay you maybe 5 figures, right? So, but when you look at that, some of us who know what a college degree actually translates into in terms of additional income over the course of time, and know how to actually, as I say, parlay it into a goal, because that's what we're looking here with your accounting information. How do you take this information to help you move to your destination or your final goal? That makes a difference. So if I spend $40,000 on vacation or $40,000 on a college degree, that's a difference. It's still a $40,000 expense, but $40,000 on college education is a greater use of my funds than spending $40,000 on a vacation, which I hope to be able to do one day. And also it says it won't tell you the hard truth. So things like your pricing, it says AI has no incentive to warn you that your pricing is unsustainable. How would AI know that your pricing is unsustainable? The only way to know that your pricing is unsustainable is to be able to understand the market, understand your pricing methodology, as well as what are your actual goals moving forward. And are there any other factors of your production or operation that may likely change in the future? Some things may become obsolete. If you have competitive or supplementary products, those will also make a difference in how your pricing works. But again, AI will not be able to tell you that because they aren't paying attention to the market and the industry. It learns from your past and not your future. Again, machine learning or AI is retrospective. It looks at all of the information in terms of dollars and cents and tells you, okay, this is what I saw from your previous activities. And if all things remain the same, this is what's going to happen moving forward. But again, it can't model the impact of an industry shift, new hires, a market shift, or any additional operational or production changes that you're looking to make. When things go wrong, and usually they will, right? You can't call your software to say, okay, AI, can you tell me what happened? And I know because I've tried this. I did a test. I've did multiple AI platforms, and I asked all of them the same thing. They gave me a lot of the same basic information, but once it became beyond me asking like basic information or factual information, I got different information from each one, and neither of the three platforms that I use gave me the actual information that I needed or that I would have given my client at that point in time. So I have done is where I've tested platforms to see what information they're going to give me versus what the human would say about it, and they all come short once you move beyond basic information. So looking here, it says AI produces that. This shows us the difference between is tracking the numbers for you, right? It can categorize your transaction based on the information that you put in it or historical activity. It can give you a cash flow.
So go ahead and